today's session, innovation doesn't let a crisis go to waste. These things, you have to do these titles like, a month or 3 in advance before you get there, and then you hope that the title's still valid. Yes, right. So we were talking, we got together last Friday on a Zoom call, and the question was so we talking about the crisis from last week or last month or the pandemic? And of course it was everything. So, but again, my name is Mark Ivanko. I work at the Home Loan Bank in Pittsburgh. We're a government-sponsored enterprise, and so what we do, we're sister banks to Fannie and Freddie, so if that helps with context. And we have a dual mission that provides liquidity to our members and for them to invest in affordable housing, community development, and mortgage finance. So that's my gig, and honored to be here with the group today. So I thought it'd be easiest to just turn it over to each of the participants and let them do a little introduction on themselves. So Wendy Kylie from Piermont Bank, turn it over to you.
Sure. Good morning, everybody. So Wendy Kylie, founder, CEO of Piermont Bank. So Piermont is the first digital bank charter that FDIC and New York DFS granted. And we still remain as the only new charter bank since the last financial crisis, 2008. And the bank is completely digital, tech-driven, and we essentially overhaul the entire back-end process of how commercial bank usually gets done, and trying to do everything much more efficient, much more common sense, and more relevant to today's audience. This is my 29th year in banking. I've seen repeated pain points, same type of pain points from the customer as well as an operator. So it was really a good time to really start from scratch and build a bank that's much more relevant to the digital age. Speaking of crisis, Piermont was born during crisis. We opened July 2019. A few months later, pandemic hit. Obviously, in the last 2 months, we're dealing with a very unprecedented banking crisis, and the fallout from that is not over yet. So I look forward to discussing with my fellow panelists in terms of what that's going to look like from innovation, digitalization standpoint.
Awesome, thank you. So pandemic puppies and pandemic banks, so first one.
There you go.
And we have 2 of those, puppies that is. All right, next, Brendan Coughlin from Citizens Bank in the Boston area. Brendan, a little about yourself.
Yeah, thanks. Brendan Coughlin, Vice Chairman of Citizens, run the consumer bank, which includes all kind of traditional retail banking, branches, digital, call center, also our small business lending segment, consumer lending, the mortgage division, buy now, pay later, student lending, auto lending, credit cards, et cetera, and our wealth management practice as well, up to ultra high net worth individuals. I've been at the bank for almost 19 years. And Citizens is a top 10 bank in the U.S., $225 billion in assets. We've recently done a handful of acquisitions, bought the HSBC U.S. franchise, Investors Bank in New Jersey. We've bought a mortgage company, a few wealth divisions, and a handful of commercial capital markets organizations. So we've been a bank on the move. We were owned by the Royal Bank of Scotland for years and years, and after the great financial crisis of 2008, we went public in 2013 and 14, and really have been on a mission to modernize the bank, lean in an innovative way, and create a name for ourselves. So we've been on the bleeding edge of some innovations. We can talk about that today. We were one of the first organizations that really got into buy now, pay later, which at the time we didn't call it that, nor did we even imagine the industry to take off, but we were early on that. We were the first bank to launch student loan refinancing and try to disrupt the student lending business, to name a few. So we've been on an innovation journey through the last decade or so.
Thanks, Brendan. That's awesome. And then Mike Degnan is from PNC Bank. And just for clarification, I worked there for 20 years. And Mike and I are both in Pittsburgh. So, Mike?
Yeah, thank you. Yeah, my name is Michael Degnan. I run a team called Enterprise Innovation for PNC. PNC is the fifth, sixth largest bank in the country. We're now more national, coast to coast. We're present in the top 30 of the major markets. And we've been on a variety of journeys as the bank has grown. One of them has been a technology and an innovation journey. I joined the bank about 5 years ago. I've always done new financial services things. So I started one of the first neobanks in the country, a company called Movin, a little while ago. That company has now pivoted, innovated itself as it's doing it, about 10 million monthly active on the platform. I am an active angel investor in fintech companies in a little bit different area. I've run digital banking on the business side for a while for a bank called Santander in the United States. And I run an innovation team now for PNC. We are group level. We touch every major team, industry, business group, internal team within the bank. And we tend to look at bringing new things into PNC. So we look at market trends, we look at technologies, emerging technology. We have like a bit of an R&D department where we play with things and try not to get fired. We do a lot of little market design, a lot of internal product R&D, business development, things like that. So if it's new things that's happening and that PNC wants to go into, we typically get involved in some things and help to figure out what to do. So it's a lot of crises, a lot of interesting things going on, and it's an interesting time to be part of this opportunity to bank.
Yeah, may you live in interesting times. That's never been more true. So why don't we go with some questions? There is a QR code if you want to ask questions of the panelists. I can see them down here. You can bring those up at any time. But so why don't we start with Wendy? So with the recent banking crisis, do you think innovation will slow down or pick up?
I honestly believe that this is going to accelerate innovation. And it's really the needs to innovate. We can all anticipate much heavier scrutiny from a regulatory standpoint as operators of banks. Regulators are also trying to identify and recalibrate in terms of their role in regulating non-banks, right? So with the fallout from the recent 4 bank failures, it is no different from the post-08 crisis. We should all fully anticipate that scrutiny and the tightening of the regulation. We can only sit here and hope that it is not going to swing all the way right to the other side, where it's going to be very counterproductive to the growth of both in digital innovation as well as core, right, SMB market, small mid-sized business, where credit is really, really important. So with that said, where we can expect a lot of innovation is especially within banks, is how do we bridge that gap, right? Knowing that there will be much more regulation, how can we do our mid and back office much more efficiently, right? To handle all the compliance requirements, the additional, right? Meeting all the limitations, the banking laws, the rules, and et cetera. And that's going to be critical because if banks do not actually focus on innovation in that mid and back office, it is very difficult to keep up with that net margin, right? Net margin is not just about the difference between interest income and how much we are earning from, the cost of deposits and interest income, right? At the end of the day, that net income, that bottom number that matters to everyone is also expense. So you cannot continue to operate and be able to grow and scale if you don't innovate your internal processes. Really, really critical, because when people talk about innovation, we always think about just technology. No, it's not only technology. Innovation is technology as well as innovating your own processes, changing user mentality, adoption of technology, all very critical. So I fully anticipate that from the larger banks, my colleagues sitting on this panel, as well as down to the newer digital enabled banks like Piermont, that we're all going to be spending more money and more focus, more time on figuring out how to deal with compliance, how to deal with regulation with better technology. And secondly is product, is how to be more relevant, right? because we are seeing contraction in the last 12 to 18 months in terms of venture capital, private equity support to fintechs. And it is naturally weeding out a lot of players. And banks see it, right? So we need to step up the game. How do we innovate our own products so that we can remain relevant, right, to the marketplace? So those are the two areas I would say.
Yeah, thanks. I mean, you get to this point in the cycle, and it's increase revenues or cut expenses, and that's where we are, right? And you have one of those two choices, or actually both those choices. So you're talking about doing on the innovating side, but at the same time, compliance is going to be brutal. It's just from the smallest banks to the largest banks. That's what they're going to be faced with. So Brendan, maybe jump down to you. Top 2 or 3 things you're working on right now.
Yeah, maybe frame it a little bit with some context on why it's important. But I think banks right now choose to not innovate at your own peril. And there's some existential threats, I think, to the business model for consumer banking in particular right now, driven by the digital advancements. One is just the first principles on why customers pick banks. Used to be based on convenience, and convenience was defined by physical presence. Now convenience is defined by digital, and it's a table stake. And so in order to get market share, you actually have to be uniquely differentiated and create value for the consumer. There are 5,000 banks in the US. It would be hard-pressed to find 5,000 differentiated customer value propositions. So I think the market's ripe for consolidation. And my point around innovate or don't innovate at your own peril, I think if you don't, you're going to wind up with a different brand on your door soon as the economic clouds clear and M&A becomes more viable. Second point would be just the economic model for banking is under siege. So with overdraft income going down, the cost to serve basic banking customers is roughly 2 times the revenue generated from day-to-day banking. And so you've got to actually create economic value through share wallet and deepening on more life event products. Some of the smaller banks don't have those at scale. And so it's another element around innovation and creating value for the consumer that's really going to drive it. And the stakes are that high because if you don't, I think you're going to wind up with an economic model that doesn't work. And really have some trouble competing to win at scale. And technology and brand matters, and those investments are better served from places that have scale. So any case, there's a bunch of places that we're leaning into on innovation. I think from my perspective, innovation needs to start from the customer. What's the need you're trying to solve? And then what are the solutions that come in place? It needs to be commercially viable and scale. You need to know how it works operationally. There's a handful of things that matter, but if you start with technology and try to find innovation, it's a little bit like running around with a hammer trying to find a nail. So we look at what our right to win is as a franchise. We've got a lead in payments and buy now, pay later. So our Citizens Pay business is one that we're investing heavily in to modernize the payments ecosystem and create customer value, to create an alternative to credit cards, but done in a very responsible way. So we're doing it differently than some of the fintechs. We're reporting data to the bureaus. We're underwriting customers in full. Our credit performance has been exceptional. We're also using it as a bit to cut the corner on customer acquisition costs. So if we can acquire a customer through our national relationship with Apple or Microsoft, we don't have to spend money to acquire their checking relationship. Can we deepen the relationship? So all things payments and buy now, pay later is one space we're innovating around. I think HELOC is another one. We've been one of the largest originators in the country in HELOC, and we did so through data and analytics. So we realized that there are 4 things you need to get a HELOC: your credit score, income, a clear title, and we have to know the value of your house. Turns out we know all those things about most consumers, and so we had a mindset around make a HELOC feel more like a personal loan versus a mortgage. And through data and analytics, we re-engineered from the inside out the full customer experience. And so we're opening about 1/3 of our HELOCs in under a week and getting funding to customers, which is sort of a business case a little bit in how customer experience in the digital world wins the day, and how that can be very distinctive and differentiated, where the guts of the experience actually is very traditional, the product structure. In fact, even our buy now, pay later program, it's nothing more than a 24-month installment loan. Every bank in the country offers that, but the innovation was around taking the friction out of the customer experience and making it so easy that it could not only dramatically make it accessible for consumers, but it fundamentally changed the way a firm like Apple actually went to market to sell their products. But under the covers, all it is a simple standard financial product wrapped in an incredibly innovative and digital and data-fueled experience. And so anyway, those are a few areas. There's a bunch more that we're pushing on, but those are some themes.
Awesome. Thanks. And Mike, as I said, I spent a lot of time at PNC, 20 years from 94 to 14. The innovation team, which you run, has really gained steam like I've never seen before. How do you think about it? Almost the same question. How are you thinking about this kind of stuff, and what's in it for PNC?
I like I think like the frame that you introduced earlier, where it's about, like in times of crisis, like you think about what do you have to do to survive? What do you have to do to keep going? And what do you have to do to thrive? I think about it like an income statement, really. Like, yeah, you sell more, cut cost, yeah, all true. But what's also true is all of the stuff in the middle of that statement, which I generally call productivity. How can you make the existing things that you're doing as a bank, as a company, as any company, really more productive to extract as much economic value out of that, to give you the flexibility to respond in times of opportunity. I'm not going to say crisis anymore. I'm going to say opportunity, right? So that's what PNC's really been doing for a while now. And the way we think about it is that innovation really is a cultural activity. Like anybody can innovate anywhere up and down the bank. Like some teams like mine are fortunate enough to have special tools and things that we can do with to give us a little bit more ability in a proper risk-controlled environment.
And staffing too, right? Yeah.
Yeah, staffing is helpful. Yeah, budget, things like that, all nice things. But like I personally think the most powerful innovation tool in the bank is a Post-it note. Because it could be anything. If people think about human centricity, customer centricity, customer human-centered design, from users, from employees is very important, from your coworkers, all the way up through customers, that tends to operate as a clarifying kind of framework that allows you to kind of get to the point to do things. And you can ask innovative questions like, should the paper be in a better place? Like in the branch, should we do something differently? To, should we rebuild our technology stack to move to a coreless bank, right? So PNC, we've been really adopting things like design thinking, human-centered design, emerging technologies. We're in the middle of rebuilding and are almost through rebuilding our entire technology stack to be all the ilities, like more highly scalable, modern technology, DevOps everything, containerized everything, all this stuff. That gives us the ability to be very, very flexible, to be very good athletes, like we talk about, which allows you then, if you have the cultural aspect of being open to change, and you've invested in the things that make you productive, like better technology stacks, everything that Wendy was sharing, all these things there's things that really make us a much better place to do, to allows us to respond when opportunities arise. In the times of a crisis or in times of better times. We were able to, we did an acquisition of BBVA's U.S. operations, and we were able to integrate that, complete the transaction into the integration like over a long weekend. For the most part. So there was a lot of things to do with our capability that really allowed us to kind of bring it together. But that isn't something you turn on because you feel like it. That's the result of constantly practicing, constantly owning your trade craft, and constantly putting yourself in position to then take advantage of the opportunity when it comes.
Yeah, it's great. You know, the BBVA, if you don't know, is a $106 billion bank that PNC purchased, and like you said, over the Columbus Day weekend, wrapped it all up and brought it forward. So sort of along those lines, Wendy, financial product innovation, right? There's as Mike talked about, cutting expenses and making things more convenient for people. But then on the offensive for product innovation, where do you think that next wave is going to come from? Is it going to come from banks? Is it going to come from fintechs?
I actually believe it's both, but we're going to see a lot more innovation coming from banks. Going back to what I said earlier, the speed and relevance, having relevant products and relevant UX, critical. And that's one thing that fintech has done better than traditional banks. And the speed part is the most difficult part for traditional banks. And that's why I decided to build a bank from scratch, right? coming from JP Morgan, Citi, spent most of my careers with larger institutions, is the inability to move fast. And then I'm not talking about my colleagues on the stage, not at all, but the point is that they're all working on it. Every bank, right, from the largest down to the smallest, we all understand and recognize the importance of digitization, innovation. But it's about how quickly can you do that, right? So at least we have the luxury of, we don't do a lot of presentations, right? It's much more agile. So we are built and run like a fintech, like a tech company, right? So we launch BaaS program, and we can do BaaS onboarding, total integration within 3 weeks versus 3 to 4 months, right? That requires overhaul, again, going back to what I said earlier in terms of process. So coming back to your question in terms of products, right? So we, at Piermont, we build our own API layer over the core. Everybody here knows Fiserv, FIS, Jack Henry's. But again, these are more legacy platforms. They're important. Regulators are more comfortable with them. They want to see banks to use them, right? So, but you got to figure out how to overlay on that. So to provide better turn time, better speed, more efficiency, accuracy. Because if you think about, especially after the bank failures, what the regulators are looking for, they want liquidity reports. They want to know whether or not you're on top of things. Accuracy is important. Data analytics is important. That's where I see the products innovation coming from. More data analytics tools, compliance, right? As well as how, amongst the existing banking products, how do we make those products more effective and more efficient, and from a delivery standpoint, speed. It just cannot take months and months to do that. And that's how banks get beat by fintechs, you know? Because after 3 months of internal presentations, approval process, and et cetera, hey, the fintechs already launched the product. Now, that does not mean that that does not have sort of the cons to that, which is, have you gone through the proper validation? Does it have the proper risk framework? So we know, right? Banks, we know risk management. Banking is a risk management business. So how do we overlay that expertise and then speed up on making our stuff and delivery just that much faster, more relevant? That's where we're going to see a lot of products. So during the prep call, I mentioned that I was reminding myself that remote deposit capture was a brand new product that was born out of 9/11 crisis because we stopped all the flights. So they literally could not go pick up checks, could not go pick up things. And that's how remote deposit came about. So let's think about that, right? So now we're looking at today's environment. We're looking at how do we prevent a bank run in the digital world? Because if today was 1965, March 12 was 1965, March 12, SVB would not have the bank run at that speed, at that volume. When people have to line up in front of every branch, and the branch closes at 3 o'clock, you got to come back tomorrow. We got to wait for the truck to deliver the cash. They would not have lost 25% of their total liquidity, their cash position. So as bankers now, no banks are immune to that, whether small or big. Because somebody can short sell your stock on the market. And if they keep at it, it can drive your capital position down to a position where now people think you have a problem, regulators come in. So how do we deal with things like that, right? What technology innovation can we come up with to prevent that, right? So there's a lot to do, actually.
Yeah, tons, right? I mean, it's driven by social media, driven by. It'll be interesting. It'll be interesting to see if there's people who are short selling stuff.
Right. So one more point, regulators are not, and I'll say it here, regulators are not comfortable with banking as a service, right? Because you have that one layer removed. So as banks, how do you make that work? What is their concern, right? They want to make sure there's fair lending. They want to make sure there's no violation of Reg E, right?
Yeah, that's what you said. You said
exactly.
they're comfortable with Jack Henry. They're comfortable with Fiserv.
Right.
Now you're trying to do something on top of that.
Right. How do you make them comfortable? And that's where you got to think about how do you deliver that, right? Like having that direct control access. Like here, we build our own API. So these are the things that we're going to see more and more in terms of new ideas surfacing.
And everybody's moving super fast. And I don't want to say the regulators aren't, but they're probably not.
They're trying.
Yeah, they are, but they don't have the resources. They don't. We talk about what they do.
It's a different goal, I think, right?
Totally.
If you think about it, for them, it's about safety and soundness. For those of us operators, executives, it's also about safety and soundness. But we also have fiduciary responsibility. We also have a responsibility to our customers, and we do have to make money, right?
Yeah,
and
yeah.
grow and scale, right? Like Brendan said. So their focus is singular. So
Right,
yeah.
right. I think that's great. And Brendan, maybe your thoughts on this and advice for the fintech folks in the audience, how they should be thinking about it and how they can partner with you.
Yeah, I mean, I think what the market is telling us now, and first of all, I've got an enormous amount of respect for a lot of the fintechs and the speed and pace and the customer centricity of how fintechs have approached the market. And I think if we're honest, as bankers, kind of holding the mirror up, the reason for that is because bankers generally didn't have that customer edge. They thought about the world from a risk and compliance and operations perspective first versus dramatic value creation. And I think it ties back into the point I made a minute ago that they didn't have to, because banks were winning based on physical convenience and they didn't have to differentiate. And as that changed, it took too long for banks to come up the curve. So I'll start with that I think the fintech community in general, I give a big loud round of applause in terms of the innovation and the thinking. I will say a couple of things though. What the current market is sort of telling us is that diversity of your business model matters, and many of the fintechs are monoline. And I think as a fintech, you got to start answering sort of a first principles question. Are you a disruptor of banks, or are you an enabler of banks to help disrupt? Are you a partner or a competitor? And I would say a handful of fintechs have that answer clear, and a handful of them are confused, and they may be doing both. And I think you have to pick. And if you're a disruptor of banks, I think there's a couple of key questions you have to really ask yourself and answer. One is the viability of your business model from a financial standpoint. If you look back at some of the bigger fintechs, valuations have got washed out. I think you can almost compare it a little bit to the dot-com boom years and years ago, where there was a lot of hype and then sort of rational markets came back and corrected. I look at a handful of fintechs and say, geez, they've got an interesting idea. They're certainly getting some growth, but I don't see like the end of the story here. The path to get the growth has been either giving away economics or structuring yourself under the Durbin limits, or things that, like, what do you win if you win? And I think you got to pull all the way through. And I think with what the market is doing now, access to private equity is tightening a little bit, and there's a little bit more rational thinking happening. So you got to have clear answers to that. And then I think the diversity of the business model is important too. So if you're a deposit-taking fintech, are you structuring yourself to have similar issues to a SVB or a First Republic or whatever, is a question you got to ask yourself. If you're a partner to banks, I think how you create that distribution model is incredibly important. So a lot of the firms that we work with for fintechs around data and analytics, credit, fraud, like really incredible help and enablement to the bank to take a step faster. Ease of implementation becomes important. Evaluating how regulators are going to look at it becomes critically important. To have your business model fit for plug and play for banks will put you in the best position to grow and grow faster, that you're pre-vetted. The places where I have hesitation, talking to a shop that's 18 people and they've got a great idea, but it's nascent and it hasn't gone through the ringer in terms of the OCC or CFPB, or tons of excitement on AI, but you haven't really fully thought it through or tested it. And you can't convince me yet that you're not going to help me create the next Goldman Sachs Apple issue where it's misunderwriting unintentionally women on the Apple Card. Like, those are the things that I worry about. And if I'm going to partner with a fintech, I want to make sure those are adequately answered and sort of industrialized and ready to go. So banks need to move faster, and fintechs are moving faster than banks, but sometimes there's a reason for that. And I think what needs to happen is there's probably a place to meet in the middle on speed and pace, so it's adequately thought through, but industrialized and ready to go, so we don't get out over our skis.
Yeah, thanks. And Mike, sort of the same question. Turbulent markets out there, right? In banking, which I'm intimately familiar with, but more just on the startups and how PNC thinks about partnering with fintechs. Maybe a few words on that.
So I think I agree pretty much everything you said, so this isn't going to be probably not the most insightful answer. But I think there's a tremendous opportunity out there. Like when the fintech thing came up years ago, it was like, you know, they're going to eat everybody for lunch. It was more of a competition standpoint, to your point. I think we're going to shift increasingly towards collaboration. And that collaboration is really going to be more about a startup company like a fintech, and you know, I'm familiar with that world. How they find the right place to create economic value within a chain of an existing institution, because they don't have the breadth of dynamic of services, the multiple faceted revenue stream, the multiple things going on that will allow a company to survive during a time of crisis. And there's two times of crisis right now. There's a funding crisis within the startup community, like we've talked about that a little bit. They don't have the capital available to go throw money for customer acquisition anymore. They have to actually have it prove it themselves. And then there's turbulence a little bit within the financial system right now. I think we've seen that, you know, a lot that I don't need to repeat it. I think everyone's seen the stories. But the combination of those really do create opportunities. We think about partnerships increasingly, and multiple different flavors of partnership. That could be, we're going to tap in and leverage the customer centricity, the value creation, the innovation from a product or service capability, from a technology capability, with a really diverse vendor ecosystem. And we're always looking for the next best thing that we can go and plug into our environment, to our capabilities, to make things better for ourselves and for our customers. Because ultimately, if you center around the customer, things usually work out. And we've been that pretty successful. There's other things we started to do as well around acquisitions. I think that's another thing that might be possible here as well. I know nothing, right? No imminent plans that I'm aware of. But I think that's something that is a form of partnership. That's a viable way that I think banks could tap into and take advantage of what a lot of the fintechs in the startup world can provide. Like, our role in society as banks, right, is to, we need to open a bank every morning. We need to provide the ability for people to pay their mortgage and buy groceries. We need to write loans for our small business customers that allow them to grow their business and employ people. And we need to do some corporate debt to service up and down all of potential customer bases. And then we need to close the bank perfectly every single day. And we need to do it again tomorrow. So that's what our regulator friends and partners look and make sure that we keep our eye on, and that's a very, very important job. Everybody in here uses a bank, right? Everybody in here wants to make sure that they can buy things and get their mortgage. We can't get that wrong. As a result of that, we need to use emerging technologies. We need to use innovative things a little bit differently than what a lot of other software companies can do. To your point, we need to make sure that generative AI that's bulletproof. Yeah. It will be transformative. It's going to change a whole bunch of things, right, in really, really positive ways for people. But if we introduce something that introduces risk that makes us less likely to open and close the bank perfectly every single day, we need to be really prudent about that. These things will come. Banks will probably figure out how to do this pretty quick, because of the value generation capabilities and that productivity middle part of the income statement. We won't be able to ignore it just because it's so strong. We'll figure out what to do with it. And I think a partnership model will probably be one of the ways that we explore using new technology and the fintech ecosystem. And I think the smarter, the more nimble startups out there that can adjust, find the new market that's emerging, will probably be more successful in the long run.
One more very quick point, I think, around advice to fintechs. If you put yourself in our shoes, we're looking at capability. Do we want to build, buy, or rent it? And you should all be thinking about the durability of your business models. And there are plenty of capabilities that banks are willing to rent forever, like analytics-fueled capabilities, things like that, just get us better. But if it's a customer-facing disruption and you're renting it out to 8 or 9 banks, over time, it may be a shortcut for banks for a period of time, but if you're in the top 15 banks, you're going to ultimately want to be differentiated at some point. And if you're looking left and right and all the other banks are renting the same thing, it's going to put the durability of your business model at risk. So as you all ideate on areas that have durability, think about putting yourself in our seat. where can you create capabilities that we're willing to rent and we're willing to rent for a long period of time versus a temporary shortcut?
And that may be in these durability, the back-end infrastructure, internal productivity tools. If it's a customer experience product, like we're doing things now, leveraging a lot of the modern technology that we've been investing in and human-centered design to kind of create niches within the customer-facing propositions that are pretty competitive. Like I think what we did with this feature called low cash mode, which is our response to start to think about if we use first principle design to help customers not overdraft, like how might we do that? Probably different than feeing them to death. So there's a lot of things like that we did that is an example of like how to use fintech-like agility, fintech-like principles, human-centered design, and modern technology to bring something to market in a way that I think has made an impact on the industry and made customers better. We can do more of that. Many other banks will do more
they
of
become
that.
table stakes, right? I mean,
Yeah, eventually it does as banks catch up and learn
sort of
about how to do
innovative
stuff.
and a cash cow or just a core part of it. And through the cloud is obviously a big thing.
Correct.
And so everybody getting there. I had one thought, and maybe this isn't a question, but so a lot of layoffs in the tech world. Does that, there was the theory or story is that fintech was hoarding talent, and now that that's out, does that bring more people into you all to do and make you think more about being in-house versus letting people do their good stuff and then partnering with them? Anybody think about that differently?
Yeah, yes and no. So I can't speak for the larger banks, but for us, because we were built much, as a completely digital bank, if I look at my employee base, it's a hybrid. I have people from traditional banks, and I have people from the fintech ecosystem that they're not bankers at all. So, creating a corporate culture and career path and engagements and et cetera has not, is not without challenge. But I do think that's, to more directly answer your question, is that yes, it does help, because in areas of, cybersecurity, data analytics, you building the right UX, right? That's where fintech has been consistently beating the banks. That's where we can grab some talent. The challenge there is how do we get them acclimated in a banking environment where risk management comes first, right? I don't think anyone can debate that banking is not a risk management business first. So that having the risk lens to doing what they do, that's the gap. That's the bridging that's needed.
Right. And benefits are good. You guys want to take 30 seconds at that, and then we'll go to Q&A?
Yeah, similar comments. I think there's kind of two reasons why non-banks were getting all the talent. One is compensation, and there was some irrational behavior going around on compensation. Two is culture. So what fintechs are working on is what banks should be working on. And so to the degree banks, while keeping a risk guardrail, to Wendy's point, we need to create an environment where people want to work here. And they think that it's a spot where we're going to be forward-leaning, customer-centric, and create great things. That's on banks to do. And I think a handful of banks are on that path. But to create that excitement that this is a place that's moving and shaking is on the jobs of the banks to create that environment. But I do, so the question, we are hiring people from the outside. We're weaning our way off of vendors, fintechs included, although we're bringing some in, but the traditional vendors, and we're having a DevSecOps community and building stuff our own. So that's creating an ecosystem of come on down as long as people believe that this is going to be a culture where innovation can happen.
Stability and healthcare benefits help that too.
Yeah, yep.
Quite honestly. Mike, real quick.
Yeah, quickly, yes, we will hire as much technology talent as interested in coming to work for us. And technology from core development, from systems all the way up through data science, artificial intelligence, machine learning, prompt engineering, that's a new kind of cool thing that's out there. Yes to all of that. Banks are probably as much technology companies, if not more so, than technology companies, because banks also have to do this other thing called cybersecurity. We live in this intersection of three really dynamic industries that are massive consumers of technology. If we do this the right way, we're going to create the environment that will attract people that will want to come for the right value proposition, have a long-term career that's really going to change people. We are all fortunate enough that we have customers that when we deploy something with a new innovation or technology area, like PNC has 10 million people that are going to use it. Like for a lot of people who are interested in having their software built and used, that's a pretty good value proposition. And some version of that is where we'll find our medium. And if you want a job, come talk to me, please.
Hiring, so I hear. Good. And the Home Loan Bank, we had the same issue. We had job openings for 8 months, 9 months, 10 months, and now we're getting 5 applications in for a job. We couldn't get any in, and that's sort of turned. So, can we do the questions? How does that flow? Yeah. Yes, understood. Is there, maybe take one, or I don't see them. Are there any questions for anybody? They're not, but which is okay.
I think he's raising his hand.
Okay, yeah, go ahead.
Brendan had a great point. I think about a number of fintechs that are trying to compete with banks versus those that are enabling banks. A lot of the competitors are going to try to pivot over. How should those of us who've been built from the beginning to partner with banks, what should we be aware of, or what should we help make our banking partners aware of as kind of competitors start to try to pretend to be allies of banks for a little while? And what would you do to try to help deal with that if you were a fintech?
Yeah, it's a good question. I guess I would maybe, without being too repetitive, I think that how you design the simplicity for integration, your flexibility to work with a bank will be critically important, and then the industrial strength and testing that you've thought it all the way through. You put yourself in our shoes, and to the degree you guys do all of that, look, there's a lot of value that I place in partners that are incredibly nimble and they're hungry and they're willing to get in and help just solve problems. And so, what do you have out of the box? How easy is it to use? How tested is it that it's answering all the questions that go through our mind? If you get all questions of that, to the degree you can continue to be flexible, nimble, and just hungry and really interested in creating a lot of value for the bank, that would be good. I also think you should take some risk, and there's a try before you buy mindset. How do you get in there? And you guys put some skin in the game up front to make it attractive to want to go at some of this stuff. These are all the things I would begin to think about as you think about how you keep a competitive edge. If you have that sort of enablement partnership mentality, you want to keep it.
I'll add to that as well. So yes, again, Brendan, totally agree. It's how to be a flexible partner. The other thing that I think a lot of early companies, early startups or fintechs who want to be service providers to banks tend to miss is, as well as important as the product is, as well as important as the partnership approach for how you work, is the internal procurement systems and processes that the fintech is able to put together to integrate well with a bank onboarding process, which everybody knows probably takes longer than what everybody would like, but often you'll see business plans in startups in fintech companies that have built in things like 2-month sales cycles, or it's a 1-page sign up to be customer, and that just does not work with a company, with any bank of size, because of a lot of the things that we have to do on a daily basis to open and close the bank and make regulators happy, cybersecurity. So I think if you're already doing, if you're a vendor that wants to be a fintech that provides to a bank, and you already have robust onboarding process and be able to plug in and play nicely with the procurement processes with the banks, including cybersecurity, you got a massive competitive advantage you built up than someone that hasn't done that before, that now needs to pivot and try and go over there, because they're just not going to line up. Like, we literally cannot work with them unless they're able to follow the things that we do. And if you have that in place, that's a pretty big quiet advantage.
Thanks. Everybody's going to be around afterwards, so why don't we finish here? And I will finish with regulators are never happy, they're just not unhappy. And we'll end with that. All right, thanks everybody. Thanks for your time and attention.
Thank you.
Thank you.